what I find interesting. Since the whole tariff talk has caused more market volatility, it's interesting because when Trump announced tariffs the first time in Canada, you would expect, the Canadian market to tank. I mean, it's not good for Canada. It's not good for the US, but it's a lot worse for Canada up front, right? Loss of jobs, loss of, companies' ability to produce revenue. And then it would be negative for the US longer term, or like a little bit of a lag before it's bad for the US because, again, higher prices, lack of consumer spending, an already strained consumer. So you would expect a bigger pullback in the Canadian market and less of a pullback in the US right now. What did we see? We actually saw the opposite. We saw the Nasdaq is one of the worst markets year to date, and Canada's actually up. And why? Valuations. The Nasdaq continues to be pricing such high growth. And if we are going into a period of stagflation, recession, economic slowdown, are those growth numbers still valid? And I think that's what's being in question. In Canada, valuations were already pretty reasonable. So I think the TSX was trading at half of the valuation of the Nasdaq, or was it the S&P 500, which means the Nasdaq would be even more. I'm not really sure, but significant discrepancy between valuations, PE multiples for the TSX and the US market. So it's interesting to see when there's periods of uncertainty, the stocks that are getting hit are the ones that have the highest valuation. And so I still think that a lot of the Mag 7 stocks and a lot of the stocks on the Nasdaq, particularly technology stocks, are priced to perfection.